We are ready to get started with Chapter 5. Chapter 5 is a short chapter, but it is a little tricky, so I hope you'll pay close attention to what's going on here. To start out, let's just review what we already know. We know the accounting equation: assets equal liabilities plus owner's equity. Under each of these classifications, we can have individual accounts. So we might have cash and accounts receivable and office equipment and so on and so forth. And under liabilities, we can have accounts payable. We might have one for each individual person or company that we owe. And under owner's equity, we're going to have a capital account. And we know that for every account that we have in the assets, it'll have its own record. It'll be an accounting form that will be set up similar to our T accounts. You'll put the name, such as cash or whatever asset we might have. And it has a debit and a credit side. Because it's on this side of the equation, we increase the debit side and decrease the credit side. Liabilities, every liability account is going to have its own T account. It has debit and credit on the same sides, but because liability is on this side of the equation, we're going to increase the C and decrease the D. Likewise with capital, we have debit and credit, but it's on this side of the equation, so we're going to increase the C and decrease the D. All of the accounts that we've been working with so far are called permanent accounts. Permanent accounts mean that they are going to always have a balance in them, or I shouldn't say always, but at the end of the accounting cycle, those permanent accounts, if they have a balance in them, will not go away. The balance won't go away. It'll just simply roll over into the start of the next accounting cycle. We are going to introduce you, or I'm going to introduce you to temporary accounts. If you recall, in capital, we said that there are 4 things that affect capital. We said investments make capital go up. Revenue makes capital go up. Expenses makes capital go down. And withdrawals make capital go down. Now in Chapter 4, we put all 4 of those transactions into capital. It made for a very big capital account. It also made it very difficult to figure out what have we spent on each of the expenses. What have we spent on withdrawals? How much money did we actually make? In order for us to get a better feel for how much we've spent on expenses or withdrawals or how much we made, we're going to take them out of capital and put them into a temporary account. So these 3, during the course of the accounting cycle, are going to temporarily have their own account. At the end of the accounting cycle, not at the end of the month, or not at the end of this chapter, but at the end of the accounting cycle, we're going to actually put those back into capital. But for now, we're going to keep them separate so we can see what's going on. So for every expense, it'll have its own T account. If I have rent expense, it'll have one. Utilities expense, it'll have one. Blah, blah, blah. You name it. Ad expenses, it'll have one. The withdrawals account will have their own T account. And over here, revenue will have its own T account. Now I'm just going to go ahead and leave investments in our capital account. Because if we pull everything else out, it's going to be very clear what's happening in the capital account. We know that everything that's recorded in the capital account is an investment. Now with expenses, withdrawals, and revenue, we have the same debit and credit sides that we do for all of our other transactions. But for this one, we don't reference our accounting equation when we decide if we're going to increase or decrease it. Rather, we're going to reference capital. If expenses normally affect capital on the debit side, then that's the side that we're going to increase. And I know you're saying, but we're decreasing it over here. I'm going to explain that in a minute. But just know that since it affects it on the capital, it's going to increase on the debit side. Withdrawals affects capital on the debit side, so we're going to increase the debit side. Revenue affects capital on the credit side, so we're going to increase the credit side. We're not going to have it match what's going on in capital. We just want to show an increase in expenses over here so we can eventually subtract it. Now, what do I mean by this? Let's say we're going to pay an expense. If I paid expense with cash, I would do something like this. I might say, I'll pay $500 cash, and I would increase my rent expense by $500. Maybe the next month, we're going to make that same transaction. I'll put a 1 here. Next month, we're going to pay our rent expense one more time, and we're going to increase it by $500. By having the plus symbol, it means I'm going to add up all the numbers on that side, and then eventually I'm going to subtract the total from capital. But I have to have a total, and the only way I can get a total is by adding it together on the debit side. Same is going to happen over here in revenue. Let's say we perform some services. We earned $1,000 and we got some cash for it. And then later on, we performed some services and we got some more cash for it for $500. Whoops, little mind fart there. We would add these two together. That's why we're using the plus. We would add these two together and we would take the total and eventually add it to capital. So the plus doesn't reflect what's going on in capital. It reflects what's happening in expenses. We're adding to our expenses, or we're adding to our withdrawals, or we're adding to our revenue. It's only when we get the total in each of these that we're going to subtract them from capital and subtract them or add them to capital. I know it's a little tricky, but I think you'll understand it better as we start working through some problems. So you might want to stop the video, get out the handout that we used in Chapter 4 with all the T accounts, and turn to page 114 in your textbook. Okay, we are going to be using the T-charts that we used for Chapter 4. We'll be using some of the 9 that we used at the top and almost all of the 7 down here, with the exception of income summary. As a reminder, we're not going to use that one until Chapter 10. That comes at the very end of the accounting cycle. I do want to point out that the last time we did this activity, I believe I wrote delivery equipment, and it should have been delivery revenue. We already have a delivery equipment up here, so if you made that same mistake, go ahead and change that now. Before we start looking at the transactions, we want to mark our T accounts so that we kind of have a visual representation of the debit and credit sides, as well as which side is going to be increased and decreased. The first thing that we'll do is write a debit and credit under each one of them. And then we'll decide if it's going to be an increase or which side is going to be increased. In the case of withdrawals, withdrawals affects owner's equity on the debit side. So we're going to increase withdrawals on the debit side, making that a decrease. Income summary, I'm going to leave it blank. We're not going to have an increase or a decrease because this one does not have a normal balance side. It depends on whether or not the company makes money or loses money to determine which one is the increase side. So you can just leave that one blank. Delivery revenue affects owner's equity or capital on the credit side, so we're going to increase the credit side and decrease the debit side. Our two expenses affect owner's equity or capital on the debit side, so we'll increase those. Actually, I apologize, we have 4 expenses. All 4 of them are going to be increased on the debit side. That means they will be decreased on the credit side. All right, now that we've marked them, just so you can see it a little better, I'm going to zoom in just on those bottom 7. And when we need to, I'll pull it down so you can see the ones that we're working with, the top 9. You should be on page 114 of your textbook, and we'll begin with business transaction number 8. It says on October 15th, Zip provided delivery services for Sims Corporation. A check for $1,200 was received in full payment. What 2 accounts are going to be affected? Take it back, maybe I should just bring it back out. You're going to use cash in bank and delivery revenue. For the sake of space, I'm going to go ahead and remove our balances here. If you use pencil, you can do the same as well because we're going to need extra space in here now. And our balances will be different at the end of these transactions. So once again, the 2 accounts would be cash in bank and delivery revenue. What's going to happen to cash in bank? It's going to go up by $1,200. So I'll record it as transaction 8, 1,200. Delivery revenue, we're increasing the amount of revenue that we've made, so I'm going to record it on the credit side of 1,200. Transaction 9 says on October 16th, Zip mailed check 103 for $700 to pay the month's rent. First of all, what 2 accounts are going to be affected? You should have identified cash and rent expense. What's happening to cash? Is it increasing or decreasing? Well, it's decreasing by $700. I'm going to squeeze it in because I think we're going to have a few more here. And rent expense is actually going to increase on the debit side because we're adding to the amount that we have spent on rent expense. Number 10. On October 18th, Rockport Advertising prepared an advertisement for Zip. Zip will pay Rockport $75 fee later. Here we have another typo in the book. If you recall, we had one last time. The chart of accounts listed Beacon Advertising, and in the transactions they're using Rockport Advertising. We're going to exchange Beacon for Rockport. So you could read it as Beacon Advertising prepared an advertisement for Zip. Zip will pay Beacon $75 fee later. So as you can imagine, we're using accounts payable. And what other account? Advertising expense. What's happening to account payable? Is it going up or down? Should be going up. We've just increased our debt by $75. Advertising expense also goes up on the debit side because we have increased the amount that we have spent on advertising expenses. Transaction 11. On October 20th, Zip billed City News $1,450 for delivery services. When we say we billed them, it means we sent them a bill because they haven't paid us yet. If that's the case, what two accounts are going to be affected? You should have selected accounts receivable City News and delivery revenue. That's how they earn their money, by delivering things. Accounts receivable City News, is it going up or down? It's going up, so we should record it on the debit side. And that's transaction 11 for $1,450. Delivery revenue, is it going up or down? It also is going up. We haven't gotten the cash yet, but we have a promise of that they're going to pay. So we're still going to count it as revenue, $1,450. Transaction 12. On October 28th, Zip paid a $125 telephone bill with check 104. What two accounts are going to be affected? You should have said cash, and then telephone is actually a utilities expense. What's happening to cash? Is it going up or down? Since we're paying the bill, it's going to go down. It's going to make our cash go down by $125. And our utilities expense, up or down? Excuse me. It will, just like the other expenses, go up by the $125. Now sometimes I have students say, will we ever use the negative side for the expenses? Well, you probably won't see it happen in this chapter, but there are occasions where it could happen if somebody overpaid their bill or they were billed the wrong amount. Then they would get money back for having paid too much. But usually it's always going to be on the debit side. Transaction 13. On October 29th, Zip wrote a check for $600 to have the office repainted. Now when you repaint an office, you make it look nice. You keep it in the same condition it was when you purchased it. Now some might say painting an office adds value to the office, and that's because when we go to sell a house, oftentimes we paint it because we want to get the top dollar. But in reality, we're not necessarily increasing the profit on our property. There's no guarantee that our profit's going to go up. What we are doing is we are maintaining its original condition. So we're going to call that painting of the office a maintenance expense. And the other account then is going to be cash and bank because we're writing a check. Is cash going to increase or decrease? It's going to decrease. Now I'm running out of space here, so I'm going to try to squeeze it in here on the side. We're going to put 600. I just have to make sure I'm paying attention to this. This is a good reminder that it's a good idea if you're making T accounts to make cash just a little bit bigger because you spend a lot of cash. And then maintenance expense, we are increasing the amount that we're spending on maintenance by $600. And finally, transaction number 14. On October 31st, Krista Vargas wrote check 106 to withdraw $500 cash for personal use. So they wrote a check to the owner. What two accounts are going to be affected? You should pick cash and bank and Krista Vargas withdrawals. Cash and bank, is it going to increase or decrease? It's going to decrease again because Krista's taking money out of it. She's taking $500. So once again, I'm going to squeeze $500 into here. And then withdrawals, is it going to increase or decrease? It's going to increase on the debit side because we're increasing the amount that she has withdrawn. At this point, I want you to stop the video and I want you to calculate the normal balance for all of these accounts. Some of them have changed. Obviously, these down here now have new balances. Once you have calculated the balances, you can click and start the video again. Okay, let's check your work. You can take a quick glance at your balances to see if they're on the correct side. Remember, they have to be on the normal balance side or the increase side of each account. This down here no longer applies because we've added transactions. So if you haven't already done so, you're going to want to check your debits and credits, and I have a new sheet of paper here. Notice that, I'm going to put this off to the side over here, see if I can line this up okay. I took cash in bank, accounts receivable green company, computer equipment, office equipment, delivery equipment. I skipped these three and came down to Vargas withdrawals with 500. Revenue I skipped and I came down to advertising expense for 75. Maintenance expense for 600, rent expense for 700, and utilities expense for 125. Then on the credit side, I went to my first credit, which was a 75. Then 11,650, capital was 25,400, and then you have to come over here to delivery revenue for 2,650. If you got the correct balances, you should have ended up with 39,775. Once again, make sure that you actually add both columns. If they don't match up, you have to go back and find your errors. At this point, I am going to work problem 5-4 with all of you. So I want you to turn in your workbooks to page 43 and turn in your textbook to page, give me a second here, page 124. Now this one's going to be a little funky in how they do this. I'm going to zoom in a little bit here. Notice that they have, on page 124, they have 1, 2, 3, 4, 5, 6, 7, 8 accounts. And at first glance, you might actually say 1, 2, 3, 4, 5, 6, 7, 8, I've got 8 T accounts. With this particular problem, we're only dealing with one transaction at a time. So I'm going to use this piece of paper. And you're going to determine what two accounts are going to be affected with the transaction. You're going to write them down here, and then you're going to record the two amounts. We're going to start with the first transaction on page 125, where it says, received a check for $1,675 for car wash services. First of all, take a look at your accounts down here. Whoops. At the bottom of the page. Figure out which two accounts are going to be affected. You should have picked cash and wash revenue. So what you'll do is you'll actually write cash and wash revenue. Now if you don't remember which one is the increase side for each one, I would suggest, once again, putting debit, credit, and think through the process. Cash is an asset. Assets are increased on the debit side, decreased on the credit. Wash revenue affects owner's equity on the credit side, so we're going to increase the credit side and decrease the debit side. It was for $1,675. We're going to increase or decrease cash. We're going to increase it by $1,675. Increase or decrease wash revenue. We're going to increase it. We're going to do number 2 together, and then I'm going to have you do number 3 and 4 on your own. Pay the monthly rent of $450 by writing check 112. Once again, go back to page 124 and look at the accounts. What two accounts are going to be affected? You should have identified cash and rent expense. Label them debit, credit, debit, credit. Cash, like before, we increase on the debit side. Rent expense affects owner's equity on the debit side, so it also is increased on the debit side. The transaction says paid the monthly rent, so is cash going to go up or down? It's going to go down, so we're going to record it on the credit side. Our rent expense is going up because we're increasing the amount that we've spent on rent. We still have a debit and a credit for the same amount. Now I want you to stop the video and I want you to try problems 3 and 4 on your own, and we'll come back. Check your work. For number 3, cash was credited for $250. Delgado withdrawals was debited for $250. Number 4, accounts payable O'Brien's office supply was credited for $245. Maintenance expense was debited for $245. At this point, you may begin working your assignments as they are outlined in Moodle, but before you do, I want to point out a couple of things that might trip some people up. So turn in your textbooks to page 125. On page 125, you see your first assignment, problem 5.5. Notice in instruction number 2, number 1 says prepare the T accounts. So it will look similar to this. Sorry, you can't see them all there. But notice that the last T account is actually on the next page of your workbook, page 45. So don't forget the utilities expense up there. Number 2 is the tricky part. It says enter a balance of $15,000 in cash and bank and $15,000 in Abe Schultz. So what you'll want to do is you'll want to first identify all of them. I'm not going to do that right now. All of them with debits and credits and their pluses and their minuses. But I'll just do it for these two right here. Debit, credit. We increase on the credit. And remember, your balance should always be recorded on your normal balance side. Cash is actually starting with $15,000. So I'm going to put that on the debit side of cash. And capital is going to start with $15,000 on the credit side. From that point on, you can then look on the next page and start recording transactions. A couple of other things to note regarding 5.6 and 5.7. Both of them have one additional instruction down here that we haven't seen so far, and that is test for the equality of debits and credits. If you turn in your workbook to page 46, I'm going to back up just a little bit here. On pages 45 and 46, you were recording the transactions in the T accounts, and you should still be calculating the normal balance within the T account. But now, instead of just creating a separate sheet of paper, they've given you a space here to test the debits and credits. You're actually going to write every account name. So go through the chart of accounts and write all the accounts names starting with cash and ending with your last expense. And then you're going to record the normal balance on its normal balance side. Cash has a debit normal balance, so this is the only spot that will have a value for next to cash. It doesn't have a credit balance, so we leave that one blank. When you get down to the accounts payables, they have a credit normal balance, so you would have something over here in the credits but nothing in the debits. Once you have everything recorded, you can add those two columns to see if your debits and your credits balance. The same is going to happen on page 48. You have a few more accounts to deal with, but you're also going to record the debits and credits and total them up. So good luck with the assignments. You're going to follow through with the assignments that are posted to Moodle and use the video, use your book, use your table partners, use your instructor as a resource, and I'm sure you will do just fine.